Good day, Team GCI. I'm Brad Alexander, and in today's GCI Market Outlook, let's take a look at forex trading on euro dollar, dollar Swiss, gold, WTI, and Brent crude oil. Just a reminder that these videos are intended as educational. We are only observing current market conditions, and these are not to be considered as trading advice. We are now watching a very rare situation where price action charts on WTI and Brent are completely different. We see WTI still at an elevated price of $93.50 in a descending triangle. Brent crude is more affected by the war in Iran, as the Strait of Hormuz is responsible for 20% of the world's shipping of crude oil, and we saw another price spike up to $119. Price of Brent crude has come down now, but the WTI Brent spread is over $12 now, where we would normally expect to see $5. While oil infrastructure in the Middle East is being destroyed, creating a supply issue, the latest WTI inventory report was far higher than expected, putting downward pressure on WTI. There's also the fear that the US may start to restrict WTI exports, creating more supply. And finally, the US is basically self-sufficient in oil, while much of the rest of the world is dependent on the Middle East for seaborne supply. The bottom line is that we need to see some good news regarding the Strait of Hormuz. If this happens, we will see the price of Brent crude oil falling faster than WTI. If tensions increase, we should see both oils rising, but the spread increasing. While we see overall US dollar strength, we've had a temporary pullback, most noticeably against the yen, the euro, and the pound. As you know, pullbacks against the trend can give us an opportunity to buy the dip, and I encourage you to look at all US dollar charts like dollar Swiss, where we see price action at the lower trend line and the stochastic oscillator oversold and turning up. The US dollar pullback has mildly affected the price of gold. Gold is falling due to profit taking and the fact that the Middle East war is raising inflation fears, which in turn may mean an interest rate rise. Many funds are talking about buying the dip on gold, but everyone is waiting for geopolitical tensions to calm down. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.